Hello everyone, Phil from BlackBull market update on the USD. So we did recently see a nice drop in the US stocks during this weekend. Now we started to see it pick up a bit over yesterday's US session, still kind of moving to the upside. So what I'll do is I'll take a nice big picture of this, kind of break it down from the start, trying to figure out where this uptrend is going to, what is kind of developing, and then we'll move into the smaller bits over here and kind of have an idea and try and figure out what is going on, therefore potential further moves to the upside if you're looking for a bit of a shorter term time frame. So as you guys do know, I do like my Elliott wave. This is a high term time frame, so we're looking for those sort of bigger, broad perspective of the market. So the first thing I do pick up here was a triangle on this section. So what we know in the triangle, it can't be a wave 2, so we do either know it's either a wave 4 or a B wave that is kind of giving that last push to the market. We'll kind of break this down first, so let's label over here A, B, C, D, and E. So you do see those nice 3 waves in this section. We see a nice move up, we see 3 waves coming down here, again 3 waves up and 3 waves moving down into this section. So that triangle is a very clear picture. So we do know we can already see a nice 5-wave structure in here. So there's either last push up of a wave 5 or it could be a C wave, or it could turn to a double zigzag. So looking back at this previous wave to try and figure out what we're looking for in the coming next move to the upside. So we're coming down this section, we do see a nice clean 5-wave structure to the upside. We see our waves 1, wave 2, wave 3, wave 4, and wave 5. And then we see a nice correction to the downside. We saw that nice zigzag structure. So we did see a nice ABC. And then we see a move to the upside. Now looking a bit into this, this does kind of break a rule already. So we do see that third wave that is the shortest wave. So we need to try and make a bit more sense of this, trying to figure out what it really is. So we see our first, looking a bit into the deeper side, we can see a 1, 2, 3, 4, and 5. So we see a nice extended first wave. Just get that one back. And what we're looking for in here is now another third wave. So our third wave can't be the shortest wave. So obviously if the wave 1 is extended, our wave 5 needs to be the shortest wave in this count. So we do see a nice, if you can look, not sure if you can see it, but we can see waves 1, 2, 3, 4, and 5. So we see that third wave kind of pushing up, and we see a really small little fifth wave inside here. So we do now have our count for this one over here, which will be our 1, 2, 3, 4, and 5. Now that kind of gives us an explanation of what's going to happen next. Now, because of that, what we see here is a nice waves A, B, and we see a C wave. So we do know that this is a nice sort of zigzag pattern, so this could potentially be that double zigzag. We see the 3 waves to the downside, and now, like I mentioned, we already see this third wave. These 3 waves going to 5 waves going to the upside. We see 1, 2, 3, 4, and 5. We see that correction. So what we're looking for now is another 5 waves to the upside. We already saw a nice clean 3-wave structure to the downside, and we saw some Fibonacci ratios to that section. We'll break that down now. And so currently what we're looking for is a potential 5-wave structure to the upside to complete this double zigzag what we have here. So then I'll finish up this nice big pattern. Hopefully we can see those highs again if we do, if we can break above these all-time highs back here in February of this year. So let's have a look at our smaller term time frames, trying to figure out what's going on here. Now, like I mentioned, Elliott wave always does go hand in hand with Fibonacci. So looking at the closer picture, if you guys do remember, we did have our waves 1, 2, 3, 4, and 5. Now I'm not really going to go into the really deep breakdown of this. If you guys want to see a quick one, we can see waves 1, 2, 3, 4, and 5 to the upside. So we do have a nice internal structure indicating that drop that does come to the downside. Now the interesting thing of this is we're looking for a kind of a Fibonacci retracement of this section. So if we pull up our Fibonacci, we start from our waves 1 and pull all the way to the upside. We saw a nice, pretty much spot on 50% retracement. Now if you're not a big Elliott wave fan, you could have used this Fibonacci even on some of the other scales as well. Now this just shows you how powerful these golden ratios really are. If we even pull it up to this over here, we saw that 61.8% retracement, which is really nice. And the nice thing about this is, if you do know about your Elliott wave, we always look for the retracement back to the previous 4th wave. So what we saw, again, I'll quickly label it for you guys. So we saw our waves 1, we saw waves 2, 3, 4, and 5. And now we see this kind of ABC structure. The downside does look like a bit of a double zigzag as well, and we saw that kind of come just into range with that previous fourth wave. So you can see it does kind of touch into that. So that gives us a nice indication alongside with that Fibonacci retracement as well, that the market is potentially looking to move further to the upside. Now, if you are more of a different kind of technical analyst, you can look for potential head and shoulders in this pattern, but that doesn't really look like a very likely outcome at this stage. Looking at the strength of this push, the downside, and the kind of strength of this move to the upside. So we could potentially see shoulder, neckline, head, neckline again, shoulder, and push to the downside. I'm not really going to draw that because I'm not really here. It doesn't look very likely. So what we're looking for now is that pullback to the downside, what we saw. Now let's break down these candles. So I'll zoom in a bit for you guys a bit better, how we could have already potentially caught this wave, and what we could do to look for further entry. So obviously we started creating a support with these candles over here. Now we did break through, and this one started pushing up. We did see this close of this candle over here, indicating this is starting to create a nice sort of support resistance zone. So I'll draw that in you guys a bit better. Then we started to see this next candle. We saw the wick rejection, we saw the close above that area, sorry, the open above the area, and then we closed in. We saw this next candle test back into this consolidation zone with this wick, and then we start to see the push up. We saw a close above this section, and this one blasted kind of into this zone. If we look to the left, we do see it offered some previous support / resistance zones. Looking a bit more, we saw that previous support as well. Now what we're looking for this other section is a potential rejection of this wick to push further higher. Now if you're looking for these short-term trades, you need to look for targets that are a bit closer and your stop losses to be smaller. So if you're looking for entries, your stop loss is obviously closer, and you have to have that take profit. Now, if we're a swing trader, I did take you through that Elliott wave sort of analysis that could work as well. Obviously, if you're looking for that, what we can do, looking for that longer sort of term trade, what we can do is you want to look for a potential pullback to now that this wave's starting. So we see a wave 1, we could look for a wave 2, and then we can look to start for entry. Obviously, we can use our Fibonacci retracement to kind of see if we hit a Fibonacci ratio in this area, and then we can start to look for entries and obviously our stop losses below that initial wave of the sequence. So obviously what we're looking for is the entry on the Fibonacci zone or the wave 2, and then we can look for the reverse to the upside. I would potentially, if we're looking to trade Elliott wave, I'd look for start to take profits as we reach these support / resistance zones, as we could see 1, 2, 3, 4, and 5, and it kind of gets rejected here, pull back down, and then start to continue up, and that could even give you more further entry. So that's kind of a nice breakdown on the US 30. The reason for this down quickly is just to let you know there was actually a Japanese, I think it's a Japanese hedge fund that kind of closed all their positions. They put their orders in when the US market was closed, and then they got their orders triggered as soon as it opened after that Labor Day. So that kind of gave us a nice crash, nice correction, nice potential entries, but we're seeing a lot of these markets are recovering. So look for these potential moves to the upside, and let us know if you have any further questions, or if you want to get in touch with us, please do so. So stay tuned, trade safe.